I'm a statistician from the Statistics Division of ESCAP, and welcome to this webinar on the Balance of Payments Manual and System of National Accounts update. Before we start our webinar, I would like to ask Ms. Rike Hansen, who is Chief Economic and Environmental Statistics Section in the ESCAP Statistics Division, to give us her welcoming remarks. I would urge one of you just to keep your microphones on mute. Rike, you have the floor.
Thank you very much, Alec, and I am very pleased to welcome you all to this joint IMF UNSD ESCAP webinar on updates to the Balance of Payments Manual and the System of National Accounts. This webinar will run today and tomorrow and be offered next week for the Pacific region. The webinars respond to numerous requests for information about the ongoing updates of these two important statistical standards. And the number of registrations that we have received for the webinar demonstrate that the interest is strong among national statistical offices and central banks in the region. And as of this morning, we had 206 individuals representing 34 countries registered for today's webinar alone. Now, most of you tuning into this webinar are aware that we are really responding to something that has already been a very long process. The ongoing updates of the Balance of Payments Manual and the SNA have been going on for a while. The efforts have been spearheaded by the Advisory Expert Group on National Accounts and the IMF Balance of Payments Committee, and a large number of specialized task forces. The work has already involved a number of technical meetings, production of several guidance notes, consultation with countries, with experts, and some experimentation with some of the proposed changes. At ESCAP, we are very keen to support this process, both development, updates, and implementation of the standards. We provide technical assistance, and we provide training on economic statistics and national accounts through ESCAP Statistical Training Institute, SIAP, and ESCAP Statistics Division. At ESCAP, we also convene a steering group on economic statistics, where senior national accountants and heads of economic statistics departments from Asia and the Pacific share knowledge, practices, and experiences. And at the very outset of the ongoing updates, this group convened to identify priority topics for inclusion in the update process. Since then, ESCAP countries, member states, have participated in piloting proposed updates to assess their impact on macroeconomic estimates, and many others have shared their insights and provided comments during the global consultation process. Last month, the Global Statistical Commission, the UNSC, they met in New York and considered the recommendations for the update of the SNA 2008. In addition to endorsing most of the suggested recommendations, they also went out of their way to commend the efforts that have been taken place. They commended the close collaboration between the SNA and BPM update teams to ensure alignment between SNA and BPM recommendations. And they also commended the many outreach activities to keep countries informed of the process. And the collaboration that we have experienced around the webinars this week and next week is yet another demonstration of the collaborative team spirit that surrounds the ongoing updates. And we really do appreciate that at ESCAP. Zooming in on the webinar, the objective that we are really setting out to achieve is to ensure that relevant national experts in the Asia-Pacific region understand the update processes, understand the resulting changes, and the implications they may have for official statistics production. And first and foremost, of course, the webinar is an opportunity for all of you who are participating to reflect, to to gain knowledge and to ask questions on implementation and priority areas for implementation that you may have in your individual institution and country. So for the webinar to really be a success, I do encourage all of you to participate actively. Use the chat function in Teams, put up your electronic hands, ask questions, take the floor to make points or share your national experiences. So please don't be shy. I mean, this is really an opportunity to also reach out to get some insights and responses to any specific concerns or questions you may have. And finally, a big vote of thanks from me and the team, both at ESCAP Statistics Division and at ESCAP's Statistical Training Institute, to IMF and UNSD for the collaboration with us to organize and deliver the webinars this week and next week. I want to thank the moderators, the speakers, the presenters, and support staff from IMF, from UNSD, and from ESCAP. And a particular thanks go to presenters from other regions who are working nights and early mornings to fit the webinars to the Asia-Pacific time zones. We really do appreciate that very much. So with these words, I wish you all a productive webinar. Thank you for the attention and for participating. So back to you, Alec.
Thank you, Ricky, for the opening remarks. So I think now we are ready to start the technical bits of the webinar. And our first presentation will be on the main objectives, priorities, and procedures for updating these two manuals. And this presentation will be delivered by Carlos Sanchez Munoz. He is the Assistant Director and Chief of the Balance of Payments Division at the IMF Statistics Division. Carlos, I will give you the floor, and maybe you can share the slides.
Yes, thank you very much, Alec. Yes, I will try to share my screen, and you let me know whether you can see my presentation.
Absolutely. Yes, I can see it. You are ready to go. So.
Okay, excellent. So let me start by thanking very much our colleagues of ESCAP for the organization of this seminar. It's really impressive to see the list of countries participating in this outreach event. And indeed, as my colleagues have been saying as an introduction to this presentation, we are trying to make everybody aware about all the changes that are coming with the new Balance of Payments Manual and the new system of national accounts. So this is an outline of the presentation that I'm going to make. This is intended as some sort of introduction to the more detailed presentations that will follow in these 2 days. And let me start by saying why we are undertaking this work and why now. So on the right-hand side, you can see the sequence of the updates of the system of national accounts and the Balance of Payments Manual. They usually follow a cycle of about 15 years for the different updates. And the last one took place in 2008 and 2009. Sequentially, the SNA and the BPM6 were released in these 2 years. But why do we undertake these updates? Obviously, we try to have our standards well aligned with the situation in the economy. So when there are important changes, then we try to reflect them in our standards. And there are several reasons why these standards might require an update. Number one is when there is something new that didn't exist when we were releasing the latest manuals. One example of those are, for example, crypto assets that didn't exist in 2008 and 2009. We call those conceptual updates. Sometimes yet what we want to change is the way how our activities are measured, and examples of those methodological updates are, for example, marketing assets or the way how we measure trade, whether we want to continue using freight and insurance as part of the bill of goods, or whether we use invoice values with everything that comes along with those. So those are examples of methodological updates that we might want to introduce in the standards. And a third example of something that might need an update is the way how we present economic reality, whether we need more details, more disaggregated information, or simply whether we want to show specific things in a different way. One example might be financial derivatives. We had a way of presenting them in the standards that was not very much aligned with the way how practitioners and users usually see financial derivatives. So we try to align in this new version of the manuals the way how we present financial derivatives to something that is more familiar to the people working in these areas. So also more and more attention in the last years has been given to consistency across the standards. And my colleagues from SCAP mentioned the collaboration between national accounts and balance of payments. But our intention was also to collaborate and increase consistency with government finance statistics, with monetary and financial statistics, or with the system of environmental and economic accounting. So those are things that trigger or motivated the need to update the standards. But obviously, the cycle that I was showing at the beginning, these 15 plus years for updating the standards might not be enough to justify what is obviously a big effort on the part of countries to adapt their collection systems to a new standard. So why don't we take a look at what has changed in our economies since 2008, 2009? So now, something that we can do is that when we need to move somewhere, we can call an Uber and use online platforms simply to get a ride. This is something that didn't exist in 2008, 2009. Also, when we are planning our vacation, we can look for accommodation using also online platforms like Airbnb. This didn't exist before. We also have self-driving cars or electric cars, and the latter is just a reflection of the general move towards cleaner sources of energy, which also illustrates the attempts to measure carbon emissions in this transition to cleaner sources of energy. So these are things that were not present in 2008, 2009, and definitely crypto assets, bitcoins, etc., didn't exist at the time. So we see that there have been quite a few changes in the economy in the last few years that obviously were not reflected in the standards, and in particular, crypto assets didn't exist at the time. At the same time, there were other things that did exist, but not in the amounts that we have nowadays. So an example is crowdfunding, for example. So I was looking into what are the roots of the modern crowdfunding, and I saw that in '97, as far back in time, we had a case of the British rock Marillion that managed to raise as much as $60,000 from their funds through an internet campaign that financed their entire US tour with the band. So they were so successful that they were financing their albums using this sort of crowdfunding. And this definitely preceded the last update of the standards. However, the real increase in the use of crowdfunding came with the financial crisis starting in 2008. And at that time, because of the collapse of the traditional ways of financing, obviously the banking system, it was very difficult to get financing at the time of the financial crisis. And this is what gave rise to the search of companies like Indiegogo, Kickstarter, or GoFundMe that were all founded in 2008 to 2010. And that really, so even if it existed before the last time the standards were updated, it didn't exist in the quantities that are available today. Another issue that changed quite a lot. I mean, if you remember a mobile phone in 2008, most probably the image that would come to mind is this one of a sort of BlackBerry, which obviously is very different from the current smartphones and all the functions that come with them, with GPS, with a camera, and with many other integrated functions that were not available in mobile phones in 2008. Also, the complexity of global value chains. Global value chains obviously existed in 2008, but the level of dependence that global production arrangements have developed in the last years was just illustrated in the times of the pandemic, when we saw how much dependent we were from each other in a globalized world. So this existed, but not in the amounts and in the intensity that we have nowadays. Special purpose entities obviously existed as well in 2008, but the traditional or the typical SPE in 2008 was a holding company that was accumulating the financial assets of multinational enterprises. Nowadays, we have many different types of SPEs, many of them with non-financial functions. They have to do with marketing assets, with intellectual property products. The level of complexity of special purpose entities and in general, the structure of multinationals is much higher now than it was years ago. And obviously we have artificial intelligence that is kicking in now and that is creating also challenges for the measurement in the economy. And I take this opportunity to invite all of you attending this seminar to visit us in Washington, D.C. in November this year, when we will have the next edition of the IMF Statistical Forum. And the theme of the Statistical Forum will be measuring the implications of artificial intelligence on the economy. So if you have time in November, please visit us. You are all very welcome and invited to this event. So just to summarize, I mean, there have been important shifts in the global economy that have uncovered some data shortcomings. I mentioned the global financial crisis. I mentioned as well the pandemic. But more in general, issues like digitalization, financial innovation, globalization are revealing the needs for data, and also the increasing demand for data on climate change. So one of the main messages that we want to transmit in these outreach seminars is that the core conceptual framework on which our macro statistics are based remains robust and resilient. I mean, it's not that we are changing the core of the way how we collect the statistics. Those remain mostly unchanged. Is mostly that we have new needs that will be mostly accommodated with supplementary presentations, alternative ways of showing reality that will be complementary to our core statistics. So we are not introducing dramatic changes to the core. It's more that we are expanding the way how we want to present the statistics. Now, when we started this work, which came in parallel in the SNA and in the BPM, we realized how many things in common we had on our research agendas. So what would be easier than joining forces and doing this research together? Also to accommodate one of the most important demands that have come from both compilers and users in the past, which is why don't we have something that is much better integrated and much more consistent with each other. And this is one of the reasons why we have done all this much work together. You see some areas that are on the right or on the left that in principle belong only to one BPM or SNA. But the reality is that even in those areas, digitalization, well-being and sustainability, BOP, current account, and direct investment. As soon as we were, dealing with the individual topics, we realized that decisions being taken in one area, we are also having implications for the other area. So in the end, we have done most of this work together. Now let me go to analyze a little more in detail some of the main areas in which we have been working in these 3-4 years. So I will try to also have or show the correspondence between the update issues that we have worked on and also the policy needs that generated or justified the need to work in these areas. So starting with digitalization and financial innovation, the policy areas that we were trying to address were macro financial surveillance, the surge in digital money, fintech, etc. And we were analyzing many things, including the way how we present the digital economy and digital trade. Also, non-bank financial intermediation was an area in which we have been working a lot, how to record fintech. I mentioned before the example of financial derivatives. Now we try to present them based on risk and not so much in the way how we present it now, basically option-like or forward-like derivatives, which were very difficult to understand by our users. So we are trying to approximate now the way how we present these financial instruments to the way how markets are seeing them. We have also been working quite a lot on crypto assets, and I'm going to explain why. If one takes a look at global financial flows and stocks, and we see the level of transactions and positions in crypto assets, it might be difficult to justify why we have devoted so much time to how to treat crypto assets. There are two reasons why we spend so much time. So one of them I have mentioned before. Basically, this is a new type of instrument that didn't exist in the previous update of the standards. So we needed to tell compilers how to treat crypto assets. But second, and this I have tried to illustrate with the figure on the right-hand side, if we see the level of volatility of in the market capitalization of crypto assets, we see that there are radical changes in the price of these assets. This is, of course, creating many policy implications, and in particular, the possibility of generating financial stability risks. And so this is why it was so important to come to a solution on how to treat those assets. Two main messages here. Number one is that after thorough deliberations and knowing that no solution was perfect, we have decided to treat crypto assets at the moment as non-produced, non-financial assets. This means that these crypto assets will be recorded in the capital account instead of in the current account of the balance of payments, and will also be recorded not as produced assets within the production boundary in national accounts. And the implication for this, or the second important takeaway of this, is that we are also have also decided to record them in a separate category. And this will imply that if in the future we observe important changes in the behavior or in the innovations that are introduced in these crypto asset markets, then we will have the possibility to reclassify these assets without requiring new efforts from compilers. It will be as simple as reclassifying crypto assets from one place to another in our core accounts. So that's something that I think is important, and which helped us close the issue. It was one of the most debated in the current update process. Now let me turn to globalization and the policy areas we are trying to address here are global trade, cross-border trade, international taxation, capital flows, and issues that we have been dealing with in the update process in the research agenda were something that I mentioned before, global value chains. They have become much more complicated. And also there was a clash between our standard principles for collecting statistics, so based on the residence and institutional units. When we are trying to follow a product, we see that the value added to this product comes across different regions, different institutional units, and we are looking at different ways of presenting these global value chains that can complement the understanding of our macro statistics. And the same holds true for multinational enterprises. Again, a multinational enterprise is composed of many different units sitting in different countries. And if you want to see the multinational enterprise itself, it's very difficult with our common principles for recording statistics based on residents and institutional units. So this is why we are introducing new breakdowns, supplementary again, that might help understand how multinational enterprises work. And finally, special purpose entities, another example that I mentioned before in my presentation as well. We are trying to illustrate the importance of SPEs with the chart on the right. And you see from the countries that are already reporting special purpose entities information, how important they are to understanding their economies. So two messages here. Number one, for the first time, we have in the accounts an internationally agreed definition of SPEs. This we didn't have before. And number two, what we are trying to do is to collect separate information, supplementary again, and only for those countries where this really matters, that will permit to show the main figures of one economy with or without SPEs. And this will be very helpful in countries in which SPEs have a very important weight. External sustainability is also another important policy area at the IMF and I suppose in many other countries as well. We are trying here to provide additional information that helps our policy areas working in one of the flagships of the IMF, the External Sector Report, in which we discuss with countries external sector stability and interconnectedness and provide policy recommendations to countries in these areas. For this, it has become very important issues like, for example, stock flow reconciliation. We are putting at the center of the BPM7 the integrated IIP, in which we will be showing the starting and end positions of a country and how they are justified by transactions, valuation changes, and other reclassifications in the accounts. This will be a key component of the BPM7. We have also reduced the methods for valuing unlisted equity to just 3. We had a plethora of methods accepted in the previous version of the standards. Now we are trying to reduce cross-country differences by reducing the number of methods for the valuation of unlisted equity. Trade classified by currency is becoming also key for the analysis of exchange rate changes and also for dependencies of countries. And it's very important to know whether you are paying with your imports and exports with your domestic currency or whether you have to resort to foreign currencies. And those will determine bilateral exchange rates and also pressures on the currency. So we are recommending that trade classified by currency becomes also supplementary information to be provided to users. We are also introducing for the first time a statistical definition of net international reserves, which is a key variable for the programs that the IMF negotiates with countries. So even if net international reserves has components that are not necessarily part of the balance of payments manual, we have introduced this statistical definition that will help countries and the IMF when they are negotiating these programs. And finally, the latest example that I wanted to bring to your attention is reinvested earnings on portfolio investment. So we have reinvested earnings already in the accounts for direct investment, but for many users, they have difficulties to understand why don't we treat the same way reinvested earnings on portfolio investment. And although we are not changing our definition of income and the reinvestment earnings on portfolio investment equity will continue being recorded as only when they are paid, the dividends are paid, We are also recommending that supplementary information is collected for portfolio investment, but also for domestic-to-domestic relationships to see whether the definition of income might need to be reviewed in the future. And as you can see in this chart, if we were recording in the current account as transactions, as reinvested earnings, also the earnings of portfolio investors, the current account balance of countries would change dramatically. This is an estimation that was made in the external sector report in 2018. And we see that countries like Korea, Switzerland, Russia would see their surpluses reduce substantially if we were introducing this reinvested earnings on portfolio as part of the current account instead of as valuation changes in the IIP. I will go a little faster. I think I'm going behind schedule. So policy needs with well-being and sustainability that we are trying to address are inequality and inclusive growth and climate change. And we will pay special attention in the next version of the SNA to the distribution of household income, consumption, saving, and wealth. And with this, that is being part of the new edition of the Data Gaps Initiative. We are trying to show the need to go beyond measuring the size and growth of the economy to better understand who is benefit and how income is distributed. So this integration of micro and macro statistics will permit to give a much higher level of detail about whether, for example, if we see a big increase in the debt of the economy, this is evenly spread across the household sector, for example, or whether there are pockets of households that are particularly vulnerable, that are the ones that are accumulating more debt. And obviously, the implications for financial stability are completely different in one or in the other case. This will only be possible if we are capable of combining macro and micro statistics in our analysis. Another important change is the incorporation of unpaid household activities to the account as supplementary estimates. This non-market activity performed by households without monetary compensation will permit us to have alternative measurements of GDP. Let me insist that these supplementary estimates will not affect core GDP measures, but will provide additional information that will permit, in particular, to analyze issues that are taking place in the informal economy, and we will see this in a minute. Also, another important area on which the new standards will develop will be environmental and economic accounting. And in this area, two of the more popular policy instruments like carbon taxes or emission trading schemes will be particularly will have guidelines on how to record these instruments as part of the broader environmental and economic accounting framework. And we see here that in this chart on the left, we see, for example, that sustainable finance, the level of green bonds outstanding is increasing dramatically year by year. Countries will also be encouraged to record the depletion of natural resources, and will also provide countries guidance on how to record resource rent from solar, wind, and water. And this will help us provide an improved measure of national wealth. I mentioned before the informal economy. Obviously, the informal economy has been there for very long. But what is changing in the standards now is that we'll have an internationally agreed statistical framework for measuring the informal economy. This we didn't have before, and the consequence was that for policy needs that have to do with gender analysis, domestic revenue mobilization, inclusive growth, it was difficult to compare countries because they were measuring the informal economy in different ways. Now, the standards will propose a framework for measuring the informal economy that will be centered in the production of households and small unregistered businesses. It will include the production of unpaid household services, as mentioned before. And this will permit us to produce supplementary estimates of economic activity that will include precisely unpaid household services. And we have tried to illustrate this with a chart on the right, where we can see that the level of informality is relatively larger in developing and emerging economies and is declining over time. But the challenge, as I mentioned at the beginning, is that even if this is a common finding, the actual level and change over time may vary depending on the measurement parameters. So if there is no standard way of measuring this, it is very difficult to compare countries. So the new framework will also promote the assessment of gender and distributional implications of informality. So now, as I mentioned at the beginning, the update process has triggered an important level of cooperation between the balance of payments and the national account drafting teams. We are working hand in hand, both teams, and this means that from the very beginning, we had joint expert groups, task teams that analyze together the topics at stage. And then in these task teams, we also have participation of other statistical experts like government finance, monetary and financial statistics, environmental accounts, people in working on the updates of classifications like ISIC or CPC. And we also have had some users, some policy users. So it was a very heterogeneous composition of these expert groups, which I think made them much richer in terms of the analysis of the research agenda. So they were issuing single recommendations instead of going in parallel. And actually, the decisions were taken together because we had joint meetings of the advisory expert group on national accounts and the balance of payments committees. And when they were not capable of coming to a decision, in those cases, there was a key role of the editorial teams in which we were presenting our technical advice to the committee and to the AG in the event of disagreements. I have to say that this was a real minority, and usually it was not, disagreements between national accounts and balance of payments. It was mostly disagreements across countries that obviously they are in very different situations, and for them sometimes it was not easy to come to a conclusion. But it was, as I say, in a very minor number of events that our intervention was necessary. So we have fully coordinated the preparation of draft annotated outlines for both manuals, and we have even agreed to have chapters that will be exactly the same or very similar in both manuals that we have prepared together, and that and in which we'll have common text for general principles. In some cases, obviously, because national accounts has a focus, balance of payments has another focus, we will be amplifying our explanations for issues that are of more interest in one manual than in the other. Now, another important feature of the current update process is that we have had several processes of global consultations, and I will come back to this in a minute. And the annotated outlines have been one of the parts that have been subject to global consultation, which has given the opportunity to all countries in the world, even those that were not participating directly in the task teams, to give their opinion, and those opinions were taken into account when taking decisions. And we will also have a central pillar of this consistent process, which is the common glossary of terms and definitions that will apply to all macroeconomic statistics, to the 5 areas that I mentioned before: national accounts, balance of payments, but also government finance statistics, monetary and financial statistics, and environmental accounts. This is just an illustration of what I have mentioned before: joint task teams, the communities, the 3 other communities also being taken into account, global consultation on compilers and users, testing, and a holistic review of priorities at the end of the process. But let me emphasize two of these components. Number one, I mentioned before, this has been one of the most inclusive update processes, probably the most inclusive ever, because every country has been given the opportunity to give their opinion about recommendations before decisions were adopted, and not just when the decisions have been taken and only giving an opinion on the way how they were drafted. So they had their say, all countries in the world, about this. And both compilers and also users, we ran several user consultations, including one on crypto assets. So users were also given the opportunity to give us their opinion about the changes that we were discussing. And the second important aspect is that of testing, because we were assessing the feasibility of the changes that we were proposing before adopting them. So we were trying to be sure that whatever we were proposing was going to be doable, feasible in practice. Now, this map just gives you a picture about the level of inclusiveness of this process of global consultations. And you can see that almost all countries in the world, 176 countries, have participated in a minimum of one global consultation. I think many of them have participated in many of the global consultations that have taken place thus far. So where we are at the moment, so you see the different phases of the projects. I think it was mentioned before in the introductory remarks that in the meeting of the United Nations Statistics Commission, the recommendations that will be adopted and incorporated to the SNA, this was agreed at the meeting at the beginning of this month. So we are currently in the process of drafting the two manuals, and the final step of the process will be the adoption of the new standards and the release of the new manuals in March 2025. In the case of the SNA, the manual is adopted by the United Nations Statistics Commission at its annual meeting in March. And in the case of the balance of payments manual, it will be the IMF chief statistician, the one who approves the balance of payments manual. And the release dates will be the same. And now this is just the beginning of the process. I mean, it's not the end. It has been a long process of 4 years, but in reality, everything starts in March 2025. And there, countries will be not left alone. So we will have a strong battery of support to countries, what we call a multi-pronged strategy of implementation, in which we are organizing regional workshops. This seminar today is one example of them. But this is just the first phase in which we are organizing these workshops remotely. But our idea is that after the release of the manuals in March 2025, we'll start a second phase of regional workshops in which we'll be meeting with countries face to face. And the focus of the second battery of seminars will be much more on implementation, what are the plans of countries, how we can support them, and whether the countries will have the sufficient resources for the adoption of the standards, hopefully with a shorter delay than it was the case in the past. We are ready to put all our efforts into helping countries. We'll provide technical assistance and training, especially to those countries that are more in need of help. And we will also develop methodological handbooks and compilation guides that will provide advice to countries about more practical ways of collecting the data. We will also coordinate among international organizations to be sure that we don't duplicate efforts. And then another important element of implementation is that we are working on a new digital platform for collaboration. We call it the Compilers Hub. And the idea is to have a forum for sharing best practices and permitting interactions between compilers for peer-to-peer learning, but also for interaction with users, permitting them also to share views and discuss with compilers about statistics. Our idea is that this compilers hub will also be housing electronic publications of all the manuals. Our dream is to have something much more modern in which we will be able to cross-reference across these electronic versions of the manuals. And we will also have what I mentioned before, the common glossary of terms and definitions, which should permit us that if you enter into the balance of payments manual, the electronic version of it, and you hover, or the SNA, and you hover over one term, then the definition of that term will pop up in a window such that you don't have to go somewhere else to this common glossary to see what a particular term means. And that will be harmonized across the different statistical domains. So we believe that the final product will be much better, but of course we want to hear your feedback about whether this is making your life also easier. And finally, this is my last slide. We wanted to just show what we consider to be the ingredients for a successful implementation of the new standards. So first of all, global consultations have not ended yet, and now we are putting for global consultation the draft chapters of the two manuals. So please participate in these global consultations. Be sure that when you send us your opinions, we are taking all the opinions into account and trying to incorporate them as much as possible in the final drafts of the manuals. Work on your own timetable for adopting the new standards and ensure that you have sufficient resources for implementation. We recommend also you to engage with your reporters and also with your users to be sure that they are aware about what is coming and that they will help you enroll and adopt the new standards and make them successful. And finally, hopefully with the help of this compiler hub that I mentioned before, it will be possible for countries to share tools, best practices, resources, and learn from each other. So that's basically all I wanted to say right now. So thank you very much for your questions, and I will be very happy to take comments of questions right now. So over to you, Alec.
Thanks, Carlos, for that great, insightful presentation on the process of the update. So if there are any questions, please do feel free to raise them up, and you can raise your hand. And we also give participants to just type in the questions in the chat function. It could be a question, or it could be a clarification, or it could be how your respective countries have been positioning themselves across the various potential updates. So I open the floor for now. I don't see anything in the chat function.
I think it might be important to note, Alec, that obviously this is a very high-level introduction to the seminar, and there will be the opportunity, of course, to dig in much more detail in the course of the seminar.
Sure, absolutely. So I think we can simply proceed to the next session. And Carlos, thanks so much for your time. I'm considering the time in Spain now. Yeah, so I'll invite Maja Gavrovic. I hope I pronounce your name properly. And she's a senior economist in the IMF Statistics Department. And she will give us a presentation on the building blocks, the integrated framework, accounting principles, concepts of economic territory, institutional sectors, and regions, which are really important and common to the two frameworks. So, Maja, I give you the floor, and you have 30 minutes. Yeah. Thank you.
Thank you, Alec. I hope you can hear me. I'll try to share my screen and the presentation, and if you can confirm that you can see it.
Yes.
Yes.
Okay,
Perfect.
thank you. Thank you. So, good day to all the participants and welcome to this joint virtual outreach seminar on the update of SNA and BPM. As Alec already said, the session will be dedicated to shed lights in building blocks of two manuals, and it will focus on two chapters that have been prepared jointly by NA and National Accounts and BP, with an aim to ensure consistency of the core concepts relating flows and stocks and accounting rules and residency institutional units and sectors. Okay, I don't see if my slides are moving. Okay, thank you. Yes, I see it. Today, as said, I will show give you some more details on what will be new in these two chapters. So first of all, to say, as Carlos already said, there won't be very much changes, very big changes in the core principles in the two statistics, but there will be some additional clarifications and explanations which will provide to compilers better view on how to record some issues. As you can see, issues on flows, stocks, and accounting rules will be covered in the Chapter 3 of BPM 7, which will be corresponding to 2025 SNA Chapter 4. This will also be the case with Chapter 4 in BPM 7, which will cover residence institutional units and sectors, and it will have corresponding chapter in 2025 SNA. The structure of the chapter regarding flows, stocks, and accounting rules will be similar to the chapter structure in the existing 2008 SNA manual, and it will cover, let's say, a principle of valuation, of time of recording, partitioning, and so on and so forth. And today I will just, in a nutshell, explain what were the discussions and what were the main things that will be more deeply clarified in the new manuals. Regarding valuation, before and during the drafting process of the manuals, there were raised several questions were raised. One of them was the valuation of concessional lending. As you know, debt in the concessional lending involves transactions where a loan is granted with an interest which is lower than the market rates. And both existing manuals already acknowledge that there is a transfer element with concessional lending, but there were no straightforward rules how to deal with it when it comes to recording these types of transfer elements. After discussions, it was decided that transfer elements will not be recorded in the central framework of either SNA or BPM. It could be recorded as a supplementary item, and if there are some exceptions to this general rule. One of the exception is the concessional loans which are provided by employers to employees. In these cases, we will have transfer element recorded in core accounts of SNA and BPM, and it will be recorded as a continuous stream in current transfers. Just as well, there was a big discussion regarding valuation of imports and exports of goods. As you know, and Carlos already mentioned it during his presentation, in current manuals, imports and exports of goods is recorded on an FOB basis. And to say at the beginning, at this moment, there will be no changes to this current approach. But during the discussions, during the deliberations of what is the best conceptual approach. It was decided, and the decision was made that that the observed transaction value is a more sound concept than currently used FOB. But at the same time, it was also acknowledged that at this moment, it is very difficult to implement this change. So this will be introduced in the next version of manual, so BPM 8 and probably 2040 SNA. At that point, there will be no further discussion of which concept is more preferred. So this decision has been made, but it will be more focused on how it's going to be implemented. So during this intermediate time between two manuals, BPM 7, BPM 8, and 2025 SNA, and probably 2040 SNA, countries are encouraged to further test this approach and adjust their collection systems and compiling techniques. Also, there was discussion on valuation of stock of debt securities. Currently, in both manuals, BOP and BPM and SNA, debt securities are valued at market price, but valuation of debt securities at nominal value is not something new in other manuals like external debt statistics and handbook on security statistics. And it was acknowledged that both information, so debt securities at nominal value and debt securities presented at market value are very important for analytical purposes and policymaking purposes. So it will be explicitly, compilers will be explicitly guided to together with the existing market value valuation principle for debt securities as a supplement item to have also debt securities at nominal value in the new manual. I'm sorry for this. Other issues that were discussed and that will be more clearly explained in the new manuals will belong to partitioning of assets and transactions. It will be clearly stated that partitioning of assets could reflect also to non-financial assets, emission premiums and natural resources, but also to some assets which have dual use. For example, cars, which are used by households, could be used for production if a member of household is providing Uber service or taxi service, but also the same car can be used by the same household for private purposes, which would be final consumption. Just as well, we will have several items like travel packages and tour operator packages, which will be recommended to be unbundled and classified in corresponding correct accounts in BOP. One of the issues regarding time of recording was raised during the to be resolved in the new manuals, and it is regarding the redistributive transactions. So it wasn't straightforward set in the previous manuals when to record fines and penalty transactions, and this was a very challenging issue because fines and penalties can be made or when the judgment is ruled, but these judgments could be economic unit can appeal, and these judgments could be overruled, or the appealing process could be in several phases. So it was decided that the time of recording for fines and penalty transactions will be when the ruling is irrevocable, which means that there are no further appealments by the unit, and the unit that is issuing the fine or penalty has an unconditional claim to those funds. Just as well, there were some issues regarding economic ownership, which were not completely clear in the previous manuals which will now be resolved. For example, economic ownership of natural resources and biological resources, where general government has a legal ownership. And with this legal ownership, it's granting to another unit to exploit these natural resources, and this other unit has some benefits from these natural resources, but also bears some risks. And the new manuals will give a clear view that this economic ownership of the natural resources or biological resources should be divided between two units depending on the share in ownership. Also, economic ownership of intellectual property products will be in more details discussed. Because in this globalized world, it could happen that in the multinational corporation, one affiliate is responsible for creating IPP, the other one is funding this creation of IPP, the third one is using IPP to produce some other goods and services, and so on and so forth. And there is no solution that would fit all the situations. So and the new manuals would prescribe that the previously produced IPPs, their economic ownership will depend on the underlying arrangement. Also, within the manuals, there will be a decision tree, which is already produced by UNC's guide to measure global production, which will guide compilers to decide which or what unit is whole economic ownership. And it will also be clearly stated that special purpose entities could be owners of IPP. More clarification will be provided on provisions, especially these three types of provisions related to financial assets, provisions related to non-financial assets, and provisions unrelated to assets ownership. And there will be definitions of these provisions and the way they will be recorded in future. As you can see, the chapter regarding flow stocks and accounting principle didn't have there were no big changes in core principles, but more resolving issues that were not clear in previous periods or arise during the two editions of manuals. Regarding the chapter 4 in new BPM 7 regarding residency, institutional units and sectors, just as well, there will be no big changes in core principles, but some issues that have arisen during between two editions will be resolved. And also there will be some deeper sectorization in both manuals. One of the issues that has arisen in the recent period is the classification of fintech companies. And although digitalization has created several new products, but there was a discussion whether the institutions that are responsible for this production should have a separate sector. At the end, it was decided that for fintech, there will be no introduction of new sectors, so they will be classified within the existing institutional sectors and subsectors depending on their economic behavior, objectives, and activities. But it will be strongly suggested to countries where fintech activities are very significant to have of which category for these units. Now more deeply on the sectoring in 2025 SNA. So basically the decision tree will remain and most of the questions are there. So the big spread on non-financial corporations and financial corporations depending on the services that they are on the products that they're producing will remain, but additional subsectoring regarding who's controlling these corporations will be added. So it will be a subdivision on domestically controlled and foreign controlled. Within domestically controlled, there will be another level of division of sectors on public, non-financial or financial corporations and national private corporations, and an off-which category if those corporations are part of domestic multinationals. For the foreign controlled corporations, there will be also a subcategory, of which subcategory relating to SPs. Financial corporation sector will have an updated breakdown, and this will be described in more level in Chapter 29 of 2025 SNA. And maybe more challenging part in the new SNA will be subsectoring of households according to the level of income and wealth, as this is very important for the analysis of well-being. Regarding BPM7 sectoring in the new manual, three main things have been changed. One of them is supplementary items for other financial corporations. So now we will have several sectors complementing the other financial corporation, and those will be money market funds, non-money market funds, insured corporations, pension funds, other financial intermediaries with off-which category for central clearing counterparties, and captive financial institutions and money lenders and financial auxiliaries. The other change will correspond to this division of previous sector, non-financial corporations, households, and non-profit institutions serving households, which now be two sectors. One will correspond to non-financial corporation, and the other one regarding households and NPCs. And the third change is that for deposit-taking corporations, other financial corporation, and non-financial corporation, there will be of-which category for SPs. As you could see from my presentation as well as from Carlos's, is that the special purpose entities will have a bigger focus in the new manuals. Just as well, their definition of special purpose entities will be much clearer. And one of the main things to have in mind when we're talking about the SPs will be that those entities correspond only to units which are directly or indirectly foreign controlled. There will be also some other criteria which will help compilers to identify SPs. One of them would be little or no physical presence, little or no employees, and then that most of their transactions will be with non-residents, and that the biggest part in their balance sheets will correspond to cross-border assets and liabilities, and that SPs are basically formed and established in order to exploit the advantages of legal system of the host economy. It will also be described or set up that the general government can also have special purpose units, but depending on whether those units are, let's say, independent in making their decisions or not, and if they're set up in the same economy as the general government, they will be not included in SPEs. But if they're resident of another company, they will be treated as SPs and as a separate unit. And transactions and stocks between SP and general government will be recorded in core accounts of general government and BOP, even if those transactions are not clearly visible, they would need to be imputed in core accounts. For other types of special purpose units or vehicles like captive financial institutions or conduits or similar, if they're wholly owned and controlled by residents, they will not be considered as SPs and will be referred according to their typology. Also, one of the topics that will be more clearly defined in the new editions of manuals are the head offices and holding companies. There will be guidance on determining whether the unit is a separate institutional unit and could be classified as a head office or a holding company. One of the criteria that could compilers use is if in the balance sheets of those units there's more than 50% equity of other company. And there will also be guidance on how to distinguish between head offices and holding companies. Basically, head offices are involved in managerial or administrative services of those or providing administrative service to the companies that they hold on their balance sheets. On the other hand, holding companies are not involved in the managing of those entities. And this would be a reason. This would be a way how to distinguish one from another. That will be challenging for compilers. So some other criteria could be used. For example, the number of employees in those units, because, for example, holding companies usually don't have employees, whereas head offices have employees. Many of them are on senior level, and they're also supporting staff. Also, the new manuals will give a definition of control and the difference of ownership and control, which are not equal, but the classification will be unified between BPM and SNA. And for private corporations, there will be percentage, which is already used in current BPM. And this will be that if there is more than 50% of voting power in one company, then this corporation will have a control over it. So these were the main issues regarding two of the joint chapters. Basically, many of those issues that I have raised attention to will be further discussed in the course of these 2 days. But if you have any questions, suggestions, recommendation, comments, please, this would be an opportunity to share with us. Yeah. Okay. I don't see any questions in chat. I don't.
Yeah, there are no questions,
question.
but
Okay.
maybe we can hold until the.
Of course. Yes.
Yeah, there is something
Is-
from somebody from the State Bank. I'm not sure which country is.
Yeah,
Okay.
Going back to provisions, will the provisions be recorded in accordance with IFRS 9?
Well,
From
a colleague
Pakistan.
from Pakistan. Well, this will be in detail clarified. So different kinds of provisions will have different kinds of recording. So this will be more clearly described in the following chapters of the new manual. So hopefully this will answer you.
Yeah, thanks.
But we can get back to you with this question.
I think there's a further comment there.
This is yes, this is what was for reinvested earnings on portfolio investments. So it will be a supplementary component.
Thank you very much, Marja. If you still have any other issues, please feel free to put them in the chat box, and then towards the end of the session, we can still come back to them. So just reflect on the issues as you think through them. So thank you so much. Just to be in time, I think we can move to the next presentation on globalization. So I will now invite Jennifer Rybarski. She is the Deputy Chief in the Real Sector Division of the IMF Statistics Department. So Jennifer, you have the floor for 30 minutes. We can see your presentation. Okay, yeah, perfect. It's now in presentation mode. Thank you.
Great. Thank you.
You have the floor. Please go ahead.
Thank you. Well, it's my pleasure to be here with you. I think it's in the morning over there or afternoon, wherever you are. So yes, I'm the Deputy Division Chief in the Real Sector Division here at the IMF. And I'll talk to you today some of the issues related to globalization. It was one of the major themes in the updates of the Balance Payments Manual and the System of National Accounts. Okay, so before I begin the presentation, I will quickly go over what we'll talk about today. I will start with an introduction of the issue. Then I will briefly discuss the main issues that will be addressed in the updated standards in relation to global production and activities of multinational enterprises. Of course, many of us know that there are globalization-related measurement issues and challenges, which the updated manuals will discuss some of the main issues, but I will end the presentation by highlighting, I'm sorry? Can you hear me okay? I've heard some feedback, so I wasn't sure. Okay, but I will end the presentation by highlighting what additional data can be provided to help users better understand what is going on, as well as some of the analytical tools that have been developed. So better accounting for globalization was a major part of the last update of the Balance of Payments Manual and the SNA, but that was over 15 years ago now. And these issues have continued to evolve. So what is globalization? Well, simply put, it's the economic integration of economies around the world, and it's often related to activities of M&Es. It is clear that this is a challenge for recording traditional macroeconomic statistics that are based on the concept of resonancy. Essentially, M&Es think of maximizing their global profits and are less concerned about borders. And a lot of work has been done over the years highlighting these challenges and providing possible solutions. For example, all the incredible work that has been done in the auspices of the United Nations Economic Commission of Europe with the publication of two guides, The Impact of Globalization on National Accounts and the Guide to Measuring Global Production. And globalization has been a hot topic really, since then. It's been more than a decade that those issues have been addressed, and perhaps will always be given how interconnected the world is. And to recognize this and emphasizing how globalization impacts both balance payments as well as the national account statistics, the updated manuals will have a common chapter that has been jointly written by a BPM team and an SNA team. This new chapter will bring together information that currently cuts across different chapters, as well as highlight supplementary statistics that can provide an alternative view or additional information that complement the traditional macroeconomic statistics. So a distinct aspect of globalization is the fragmentation of production and production change. which between residents and non-resident firms. And this fragmentation is the basis of global value chains, or GVCs. Now, GVCs are a fundamental pillar of the modern global economy. It's enabling companies to take advantage of global specialization, cost efficiencies, and market opportunities. So in the new chapter, global manufacturing and distribution arrangements, besides the normal, shall we say, trade and merchandise trade and goods statistics, they're broken out into 4 main types of these arrangements in the thematic account. We have re-exports, merchanting, processing, and factoryless goods production. And let me talk about each one of those. Now, the first 2 types of arrangements discussed in the globalization chapter, really the concept remains the same, but it's all brought together in this kind of overarching discussion about global production. So what has been introduced is more of an emphasis on showing supplementary information for these types of transactions, for when the item is significant, as in the case of re-exports. And one reason is because re-exports are less connected to the domestic economy compared to other types of exports. So to have information to separately identify these types of transactions, it really helps in the analysis of GVCs. The other type of arrangement discusses merchanting. And again, the concept hasn't changed compared to the previous version of the manuals, but the updated manual simply provides a clarification as to why it's recorded as a net export under goods under merchanting. And one of the main rationales for the recommended treatment is that if the amounts of imports and exports to the merchant were recorded gross, this would artificially inflate the merchandise trade in the economy of the merchant. And the recommended recording will also maintain a global trade and goods balance. The third type of global production arrangement discussed in the chapter is the processing type. Again, the concept hasn't changed from the previous versions of the manual. It's just bringing it together into one chapter and talks about the recording of this arrangement is based on the ownership of the material inputs. And the key aspect is that the processor does not take ownership of the goods during processing. What has been added to the manuals, again, is that the merchandise transactions between the principal and the other parties in a processing type of arrangement can be shown as supplementary sub-items under general merchandise. And tomorrow there'll be a little bit more of a discussion on how this looks like in the current account and the balance payments. The fourth type of arrangement discussed in the globalization chapter is the factoryless goods production type of arrangement. And this type of arrangement was not fully addressed in BPM 6 or in the SNA, and is one of the changes in treatment. So along with the key points in the definition as provided on the screen, it's basically that the factorless producer controls the production and supplies inputs of intellectual property, such as product design, but outsources the transformation process required to produce the output. The contractor takes ownership of the material input. So this is one of the nuanced differences between the merchanting type of transaction versus the factorless goods production types of transaction. So in the BPM 6, these types of transactions were treated as merchanting because there was a change in the material ownership. But in BPM 7 in the 2025 SNA, the output of the factorless goods producer is recorded gross under goods. Essentially, it's treating these types of transactions and units who do these types of activities as producers of goods. Again, to better help data users understand what's going on, these types of transactions can be shown as supplementary items. And as I discussed at the very beginning, you know, M&Es are very important and are a driver of this globalization, and they're key to better understanding what's going on. And so it's important to have statistics related to activities of M&Es. And of course, since we are compilers of statistics, you know, we really need to first come up with a clear definition of what we mean by an M&E. So the new chapter provides a clear statistical definition of M&Es, which emphasizes this idea of control and is aligned with the framework of direct investment relationship, which is a generalized methodology for identifying and determining the types and extent of direct investment relationships. So in the chapter, it really emphasizes this definition of M&Es and that it can be applicable to both the Balance Payments Manual and the SNA. And another topic addressed is specifically on these the roles of special purpose entities. Again, you know, they can be created to provide access to capital markets, to isolate owners from financial risk and reduce regulatory and tax burden. They are formally registered and/or incorporated legal entities recognized as institutional units. So they are considered institutional units in the country in which they are located. SPEs are directly or indirectly controlled by non-residents. And so the thematic chapter provides an SPE definition, as well as a typology that can be used to identify them and determine their appropriate institutional sector. Again, host jurisdictions are encouraged to report supplementary data on SPEs, in particular if the activities are significant. And as mentioned in the previous presentation, intellectual property products are featured heavily in how these types of transactions can be recorded, especially in the context of M&Es, because the transfer and use of intellectual property products is sometimes difficult to observe amongst these units of an M&E group. The main difficulty relates to identifying the economic ownership, which has repercussions for the treatment of the related flows, namely those related to the IPP use. So the globalization chapter highlights the decision tree that is in the UNEC Guide to Measuring Global Production as a useful instrument in determining the economic owners of IPPs across M&E groups. And this was touched on a little bit in the previous presentation. So I will highlight that the term SPEs will be restricted to entities that have non-resident parents. SPEs can be the economic owners of IPPs, assets. And again, this is aligned to the idea that SPEs are institutional units. So they can be institutional units that own IPP assets. So this chapter will also discuss some common measurement challenges related to globalization. So One of the things addressed is the challenge of allocating production across different economies. Again, this issue of residency is central to economic accounts, as M&Es are likely to try to maximize their enterprise-wide global after-tax profits, rather than the profits in each of the economies which they operate. So toward this end, they often structure the locations of their operations, the legal ownership of their assets, and the pricing of intra-enterprise transactions in ways that are designed to reduce their overall global tax liabilities and regulatory burdens. So as I alluded to from the previous slide, the mobility of corporate assets that are intangible, such as IPPs, can have a huge impact on macroeconomic indicators such as GDP. Another major issue is the consistency and coherence of M&E data. Now, statistics used in compilation may use different statistical units or definitions in the surveys that they're using to collect the data. And so they may not record data in the same way. So data may be recorded against different statistical units, making it difficult to a compiler to achieve consistency in the measurement of economic activity, especially if there's different surveys used. So compilers in some national statistical offices have addressed these issues by focusing attention on large enterprises in particular, endeavoring to coordinate the collection of data from the enterprise group, tracking changes in the composition of the enterprise group, and conducting coherency analysis to ensure that data are consistent. The successful pursuit of this strategy requires monitoring and understanding the business activities of an enterprise, as well as maintaining good communication with representatives of the enterprise. Essentially, they are setting up what is commonly called as large case units. And perhaps you're familiar with this graphic. It basically shows how gross trade flows can inflate your statistics. And I won't go into the graphic in detail, but the main point is that if you were to measure trade on a value-added basis, transactions would only be recorded as 110 versus what you would see in the typical gross trade flows of 210. So, for example, basically the bilateral gross flows show that country C is importing 110 from B, even though A is the main source of value added in goods that C is importing from B. So essentially the bilateral gross trade flows and any deficit or surplus associated with those flows are likely to provide a misleading picture of the location of production and the ultimate benefits or harms resulting from international trade. So the new chapter notes that in some instances, it is better to emphasize indicators beyond GDP to better understand the impacts of globalization on an economy. Indicators such as gross or net national income or gross or net national disposable income are generally less distorted by globalization and are less sensitive to the impact of M&E activities than GDP, especially for economies where there are a significant amount of M&E presence. For instance, transfer pricing, which has the effect of misallocating GDP towards economies in which subsidiaries or affiliates face lower taxes, has a less distortionary effect on GNI. Which leads me to a good segue to understanding why the updated manuals highlight the need for statistics on activities of M&Es that can complement the BOP and IIP statistics. And furthermore, the increasingly complex financing and ownership structures of M&Es, driven by these many factors, play an important role in direct investment relationships. So direct investment often involves M&Es channeling investments through several economies, resulting in a large portion of direct investment flows in some economies being flows going in and out of the economy on their way to their final destination. And again, this can make the statistics hard to interpret. And does not show the ultimate sources and destination of direct investment when statistics are compiled by immediate partner economy. And so again, this is another important reason why supplementary presentation of direct investment statistics by ultimate investing economy and ultimate host economy is recommended, basically to help address these challenges with the current treatment in the statistics. So you may be sensing a theme of what I'm talking about here is that essentially the proposal's solution to a lot of these globalization issues is to provide more supplemental detailed data. So for example, the chapter discusses adding more details to the institutional sector accounts by breaking down corporations into domestic and foreign controlled, with an of which category for SPEs. And this is to assist in the development of indicators on GBCs, and also again to better identify the role of M&Es in the current account transactions as supplementary information. Essentially, economies are encouraged to compile data on goods trade by enterprise characteristics. And many economies have added information on whether enterprises are foreign or domestically owned into their tech data, this trade by enterprise characteristics data. And these statistics can answer questions such as what kind of enterprises are behind the trade flows of goods and services. So these statistics can enable compilers to prepare this supplementary presentation that disaggregates exports and imports of goods and services and external flows. So in the graphic that I showed when I talked about calculating cross-border trade in value-added basis, there are indicators that are developed that can help this issue of inflating these gross trade flows. While one cannot fully see activities of GBCs in conventional national account statistics, a GBC, thematic account basically uses a bottom-up approach that looks at specific GBC production chains within the framework of national accounts. And TIVA statistics also provide a more comprehensive view of the interlinkages and dependencies, and it can be considered kind of using more of a top-down approach to getting at the statistics. So more granularity within the SNA framework can also be used by establishing what is called extended supply use tables. So you could take out you could break out supply use tables into, say, foreign controlled corporations and other types of corporations, for example. And again, mainly we're doing all these supplemental or more extended detailed information to better aid analysis. So other types of breakdowns could be related not only to the types of units, whether foreign controlled or not, but by, for example, the size of the firm or the trading status. If it's export oriented or not. So these are the types of additional details that you could add. And that is all I have for now. I'm happy to take any questions.
Thank you very much, Jennifer, for your very detailed presentation. And I think there was a question, but probably this was more generic beyond the issue of globalization. I think it was more, compilation, or I think it had to do with the quarterly national accounts. I think there was a question coming from Azerbaijan. So this is general. Jennifer, you can take it, or any.
Yes. So I guess perhaps yeah. So that's quite a general question, but in general, anything that are within the updated SNA, for example, all these concepts and methodologies would extend to quarterly national accounts. So the concepts would be consistent with what you would want to do for the quarters. Now, for example, you may not have extended supply use tables on a quarterly basis. That might be something you would do only annually, but in general, the concepts are the same. And actually within the IMF, we have been talking about, we have their quarterly national accounts manual. We'll probably have to do some updates to that eventually once we finalize the new SNA. So, but yeah, if there's anything specific, please feel free to ask.
Thanks very much, Jennifer. Any questions or comments from the audience? There are 152 of us here. Expected a few more questions. Otherwise, yeah, you feel free to type any questions or comments, and then maybe we can resort to them back later. I think I would propose on the program we have a 15-minute break. I would like to propose that maybe we cut it short to 10 minutes. I know some of our presenters, I'm just thinking of, the time and how long they have to wait. So maybe we can cut short our break to 10 minutes and meet again at Bangkok time, 13:22. So just maybe a toilet break and just a quick snack for those that need to go to lunch or just need to power up some sugar. So let us meet in the next 10 minutes, and we'll have a presentation on digitalization by Patrick. So thank you so much, Jennifer, and I'm sure you will hang around in case there'll be other issues coming up your way.
Thank you, Jennifer.
So see you guys at in the next 10 minutes. Yeah. Patrick, maybe you might just share your presentation as we wait.
Hello, Alec. Yep, I'll share it now, yeah. Yeah. All right.
Would you put it in presentation mode, please?
Yes.
Perfect.
Thanks.
Okay, good afternoon, good morning, good evening, good day, everyone, and welcome back to the second segment of our webinar today. And now I have the pleasure to invite Patrick Quayle, who is a senior economist at the IMF Statistics Department, and he will give us a presentation on the theme of digitalization. Patrick, you have the floor and 30 minutes. Over to you. Thank you.
Thank you very much, Alec. So welcome to everyone to this outreach seminar on the update of BPM and SNA, and thank you to ESCAP for hosting. So the presentation today is about digitalization, and better accounting for digitalization has been a priority in the update of the standards. The chapter is going to focus on bring together all the themes, digital products, digital platforms, digitalization and the financial system, measuring prices and volumes of products affected by digitalization, and analytical tools to increase the visibility of digitalization. So the motivation, the chapter is a new addition resulting from the update process of the SNA and BPM manuals to give the visibility of the impact of digitalization on production, consumption, investment, trade, process, finance, communication, and other aspects of the economy and relevant cross-border transactions. It will provide guidelines to measure digital products in accordance with broad conceptual framework of the SNA and BPM, and explain the measurement of products and assets that have emerged as part of digitalization, and provide a consolidated view of measuring and reporting on key aspects of digitalization. The content of the chapter is quite a lot in it. There's 5 sections. First section is digital goods and services, cloud computing, data assets, artificial intelligence, NFTs. Then there's a section on digital platforms, non-financial digital intermediation platforms, DIPs, and then free digital platforms and free digital products, and quite a section on free products. Then there's digitalization and the financial system, new financial services and means of payment enabled by digitalization, financial DIPs, financial digital intermediation platforms, and digital assets, including fungible crypto assets. There's a section on price and volumes of products affected by digitalization, and measuring quality changes in ICT goods and goods with ICT components, and so on there on prices. And then finally, there's a section on analytical tools to increase the visibility of digitalization. So there are three approaches, not necessarily mutually exclusive. There's thematic account on the digital economy, digital supply and use tables, and extended account to increase the visibility of free services of digital platforms consumed by households. So we'll start with digital products. With cloud computing, there are three types of cloud computing. There's IaaS, infrastructure as a service. There's platform as a service and software as a service. And the distinction between them is in all cases, they're on demand. So computing, storage, software, and related IT services accessed remotely over a network supplied on demand and with measured resource usage. And the differences between them are that in the first case, it's the access to a server, and then the user then will build what the user wants. In the second two, there's a platform or software as a service accessed on demand. Then there are data assets. Data has become an important type of produced intangible asset. So data as an asset means information content produced by accessing and observing phenomena and recording, organizing, and storing information elements. These assets are produced when information on observable phenomena, OP, such as facts, behavior, and characteristics are recorded, organized, and stored in digital format. Data that is expected to be used in production for more than 1 year is conceptually a fixed asset. Digital products, further on digital products, is artificial intelligence. AI means capabilities of a computer program or system controlled by a computer program of recognition, reasoning, communication, and prediction that emulate human recognition, reasoning, and communication. AI products may also be capable of learning. AI systems are distinguished as a special type of software within the class of intellectual property products identified as computer software, including artificial intelligence systems, with the separate recording of AI encouraged as an of which item. That's to say, in the balance of payments, for instance, that there's AI is in the computer services section. And NFTs, non-fungible tokens. There are three types of non-fungible token. They are digital records hosted on a blockchain that are associated with a digital or a physical asset or a product, but they are distinct from that asset or product. NFTs certify ownership rights to use and benefit from the asset, and may also serve to certify the asset's authenticity. So the first type is NFTs that convey no ownership rights. So, for instance, you might have the right to print a T-shirt for yourself, but you don't have any further ownership rights, just that. So that is considered consumption in the balance payments and in the SNA. And in the balance payments, it is computer and information services. It's a services item. The second type is NFTs that convey limited ownership rights. In this case, you might be allowed to reproduce the image and to sell it. Well, that's considered in the SNA, it's a non-produced, non-financial asset. And in the BPM, that's also a non-produced, non-financial asset, but it's in the section contracts, leases, and licenses. And the third type is an NFT that conveys full ownership rights. So in that case, it really, the NFT is just a record of the ownership rights. And in fact, there's nothing to record as an NFT. The underlying asset is recorded as a change of ownership. Next, digital platforms. These are operators of digital platforms are service providers that facilitate interactions via the internet between two or more distinct but interdependent sets of users, either firms or individuals. They are digitally enabled services of matching producers with consumers or funders with borrowers and are known as digital intermediation. There are three types of digital platforms. Non-financial digital intermediation platforms, these are DIPs. They facilitate transactions between multiple buyers and multiple sellers for the ordering and delivering of goods and services for a fee or commission without taking ownership of the goods or rendering the services that are intermediated. There are free digital platforms. They facilitate non-commercial interactions between users or provide entertainment and information services and are usually funded by advertising and the collection of data on their users. And thirdly, there are financial digital intermediation platforms that intermediate or mediate funding or payment transactions. Financial DIPs are discussed below in the section on digitalization and the financial system. And the graphic shows the various aspects of DIPs: payments, shopping, search, the communication, suppliers, and entertainment. So non-financial DIPs are the output of the DIP consists only of the digital intermediation services which are recompensed through a fee or commission. The diagram shows the platform at the top, and there's the consumer and the producer, or the buyer and the seller. So the buyer or the consumer makes a payment for a product, a good or a service. They usually would pay it through the platform, but the recording is to record only the provision of the service to the consumer and the payment for the service to the producer. The fee is paid to the platform. So the platform records a net fee. A second diagram for this scenario would be where both the producer and the consumer both pay a fee, where it is identified that the producer and the consumer pay a fee to the platform. But in both cases, the platform's income is recorded net, not gross. You wouldn't record the full payment for the service through the platform, although the financial payment may appear to go in that direction. Digital trade. Digital trade is all international trade in goods and services includes digital trade. Sorry, I'll start that again. International trade in goods and services includes digital trade. Digital trade comprises all international trade that is digitally ordered and are digitally delivered. Digitally ordered trade is aligned with the 2009 OECD definition of e-commerce, but it focuses on the international transactions in goods and services, whereas e-commerce relates to domestic and international trade. So digital ordered trade aligns with that definition, but it's international. Both goods and services can be digitally ordered, whereas only services can be digitally delivered. And digital trade is often facilitated by a DIP or an online marketplace that charges a fee for the intermediation services. Free digital platforms and free digital products. Digitalization has been marked by the emergence of free digital platforms as part of a daily life and a general expansion on the availability of free digital products. The SNA framework values the free outputs of non-market producers such as non-profit institutions funded by donations by the cost of production. However, this approach does not apply to free digital products in general because many are supplied by a commercial enterprise. The outputs of commercial enterprises are valued by their price, which is zero, in the case of a free product. Free products supplied by a marketplace are included in GDP as part of the price of other products that they help to sell or with which they are bundled either directly or indirectly. Taken together, the items in the bundle generate at least enough revenue to cover the operating cost of the supplier of the free product. So the overall output of the supplier of the free digital product is not undermeasured. Both platforms and non-platforms supply digital products. So some of the examples are in the next two slides. There are free products supplied by non-platform firms. These are suppliers of digital products frequently adopt a freemium pricing strategy in which a free basic version of the product promotes sales of upgrades or a premium version of the product. There are lots of examples of that. And Spotify, for instance, is an example. You can get a free version or you can get a premium version. Free digital platforms. Some digital platforms, such as public wikis, created and maintained by volunteers, are owned by ambitious and operate as non-market producers, social media, search, and access to content providing entertainment and information. Most free platforms are commercial enterprises funded by advertising and monetizing user data. Multi-sided commercial platforms often charge a price for their services to the users on one side of the platform and supply free services to the users on the other side of the platform to attract and retain these users. Free software. Free software products are often used by households for final consumption or in production. Copies of free software are frequently supplied across borders. App stores are a type of DIP where the service that is intermediated is often free. Free and subsidized apps used by households may be funded by advertising, data monetization, or other services whose use they facilitate. The services of apps funded by advertising are purchased indirectly as part of the price of the advertised product. Open source software developed by corporations is usually funded through the sale of complementary services such as training and support or other products that it helps sell. Free software developed by individuals working independently, unpaid production is outside the SNA boundary. Increased visibility of free digital platforms and products, alternative measures of household final consumption, expenditures and output of free digital platforms may be presented in an extended account on the free digital platforms. So this final point is that there may be an opportunity to present information on free digital platforms and products, and this comes back to the. I'll come back to this at the very last point of the presentation. Free digital platforms and free digital products 3. User-generated content. Users of free platforms frequently create user-generated content such as videos, articles, photos, etc., both for leisure activity and commercial purposes. Creating content for leisure is outside the SNA boundary, production boundary. Unless the creator receives remuneration, user-generated content is assumed to have been created for leisure purposes. Households that receive monetary remuneration for their uploaded content can be considered unincorporated household enterprises supplying services. If the purchaser is a non-resident, these services should be included in exports of services. Next, digitalization in the financial system. So new financial services and means of payment enabled by digitalization. The new digital financial services fall within existing categories of products, and the new digital payment mechanisms fall within the existing asset categories. That's to say that we haven't created any new categories, for instance, in the balance of payments, service categories or sectors, but they fall within them. Insurtech would be in insurance services, and fintech would be in financial services. And these include financial digital intermediation platforms, cryptocurrency exchanges, digital providers of insurance services, insurtech, digital banking platforms operating solely online, these are neobanks, e-money issuers, and online-only foreign exchange bureaus and money transfer operators. And then financial digital intermediation. These provide matching services and facilitate financial transactions between suppliers of funds and users of funds, and they receive fees or commissions for their services and are classified as financial auxiliaries. One of the reasons they're different from DIPs is that DIPs, digital intermediation platforms, or non-financial cases, are they facilitate the sale of goods, so they facilitate transactions in goods and services, whereas the financial dips don't facilitate transactions in goods and services. So they're not like intermediating the sale of a good, but rather maybe raising funds or something like that. Digital assets, including fungible crypto assets. Digital assets are digital representations of value recorded on a cryptographically secured distributed ledger or using a similar technology. They include crypto assets and CBDCs, which may be designed as crypto assets, but which do not necessarily use crypto asset technology. That's central bank digital currency. Let's skip the next paragraph because it's the same as the first paragraph. And crypto assets with a corresponding liability are financial assets, and crypto assets without a corresponding liability are considered non-produced, non-financial assets. And this is the point that Carlos made at the beginning. So, but we do consider the second last point, the crypto assets that do have a corresponding liability to be financial assets, and they're within the normal financial account. This is the decision tree to classify digital assets. Very hard to read, so just to give you an overview of what it's telling us is we have a digital asset at the top, and the first question is, does the asset have a counterpart liability? And going down the left side, we see that if it does it act as a general medium of exchange, and is the asset a liability of central bank or government? And if that's the case, well, then that is a CBDC, a central bank digital currency. And if not, it may be a stable coin. If we go to the far right, we have a situation where we don't have does it have a counterpart liability? No. And does it rely on cryptography or DLT, distributed ledger technology? And if that's the case, then it's crypto. And that question was also asked on the left-hand side. And then, is it designed to act as a general medium of exchange? And if yes, well, then it's considered CAWLM, crypto asset without a corresponding liability, designed to act as a medium of exchange. And you may wonder about its acting as a medium of exchange, because it may not act as a medium of exchange, but there may be the expectation that it will act as the medium of exchange, and that's what gives its value. And in the middle, we have different types of crypto assets or digital assets, and these may include crypto assets that are actually currency deposits, or those that are securities. Next, we go to measuring prices and volumes of products affected by digitalization, which is very challenging. So many measurement challenges arising from digitalization involve prices and volumes rather than output at current prices. Price and volume measurement challenges are particularly common for products affected by digitalization, because price change is straightforward to measure only when products and their characteristics remain static. And there's a lot of disruption with digitalization, so that's what creates part of the challenge. To capture the price and volume impact of quality changes in digital products, the prices of new models must be adjusted for the value of their quality difference from the models they replace. The commonly used matched models should be adjusted by introducing models of products benefiting from advances in digital technology that often offer substantially improved quality at about the same price as the model they've replaced. The hedonic regression models related to the price of the product's characteristics. So the hedonic model, which is very much used in the context, and it has always been in the context of IT, let us say, even hardware products, that they break the product down into its characteristic and its recommended method for adjusting prices to quality change. Another technique is to adjust the price of a digital good for a quality change is options pricing, which averages observations on the differences in the price of the item caused by a characteristic offered as an option. Here we have a figure that shows the different types of products and approaches to measuring how to measure the price deflators. So in the first case, the first bubble, we have measuring the quality change in ICT goods and goods with ICT components, and the recommended, or one recommended approach is hedonic regression methods or option price method. Cost of production of a new product feature may be used to adjust the product's price change for the quality change. We go to the blue one on the bottom left. Internet and telecommunication services, samples of contracts, products, and carriers must be kept up to date, and prices must be adjusted for quality changes. Volume index is constructed from physical indicators such as data usage to capture the volume growth of consumption and production of internet and telecommunication services. Each case, the approach is very different. Software and data. The deflator for investment in IT products or price index of a related product, such as standardized software products, should be products sold by software producers. For cloud computing, a sample of stable representative products from each product class, IaaS, PaaS, and SaaS, to estimate a deflator for cloud computing output. Physical indicators of the volume of services produced may be combined using weights based on revenue shares to construct a volume index. And finally, e-commerce and digital intermediation platforms. Deflators for household final consumption expenditures on items sold online must adequately represent prices from e-commerce outlets and suppliers, and from suppliers selling on digital platforms. And this makes the point that there's a lot of substitution goes on with e-commerce, and that has to be taken on board when producing price indices for household consumption. The high frequency of changes in the online prices will often make a monthly unit value a more suitable measure for prices than from an online supplier. And finally, we go on to analytical tools to increase the visibility of digitalization. So the first is a thematic account. The thematic account is the main purpose of the thematic account, and the accompanying digital supply and use is to increase the visibility of the activities, products, and transactions affected by digitalizations that are subsumed in the broader aggregates in the standard classification of the national accounts. A thematic account can communicate the key information from the digital SUTs in a convenient and effective format. And it's the digital SUT, which is the second one, is kind of the gold standard, is to get to the digital SUT, but the thematic account presents alternative aggregations and additional information on products and transactions that are affected by digitalization. The digital supply and use tables, they analyze the impact of digitalization on the economy along 3 dimensions: type of transaction, type of product, and type of industry. So the digital supply and use tables start with the conventional supply and use tables, and they add rows on digital transactions and products and columns on new digital industries. So it has the industries across the columns across the top, and in the main body of the table we would find whether they were digitally ordered or digitally delivered goods and services. And but there are additional columns for new types of industries, or the different industries, and there are different rows for digital type products. So that encompassing all of that gives us a very complete picture of digitalization in the economy. It's a big task, but it's a framework which people can build towards. And finally, there's the extended account to increase the visibility of free services of digital platforms consumed by households. So the extended accounts are a flexible tool for presenting concepts that extend the SNA boundaries, including expanded measurement of economic activity and household final consumption expenditures that extend the production boundary. Households' consumption of the free services of advertiser-funded digital platforms can be included in an extended account as part of expanded measures of household final consumption expenditures and output. So I think that ends my presentation. Yes, thank you everybody. So I'll leave it at that.
Thank you very much, Patrick. Maybe I can hold on to the questions, and then maybe we can go straight to the next presenter just to manage our time. So I'll now invite Sanjeev. Sanjeev, you're here. Thank you very much. So our next and last presenter for today is Sanjeev Mahajan. He's the supporting editor to the 2025 SNA and lead drafter for SNA Chapter 21 and BPM Chapter 20, Communicating and Disseminating Economic Statistics. So Sanjeev has been very active in the advisor expert group and has commented on a lot of the guidance nonsense. So really a pleasure to have you join us. I'll give you the floor and you can share the presentation. So you have 13 minutes.
Okay. Thanks, Alec, and thanks for the introduction. Also, thanks to Anna for doing a lot of the background work. I'm in the process of trying to share my screen, and hopefully I'm on that journey. And if I move that. Can I just check? Do you?
Yes.
You obviously hear
perfect.
me, but have you got
It's
full
perfect.
screen
Thank
mode
you.
now? Yeah. Okay.
You have the floor.
Thank you very much. So coming to the last session today. Good day, everyone, wherever you are. And obviously, for some people, times are a bit different in the time zone areas. So I'm going to, over the next session, cover communicating and disseminating macroeconomic statistics. This affects all of us. So I will touch on the background and introduction, the communication policy and dissemination strategy, suppliers, statistical confidentiality, an alignment framework that's been produced to cover various aspects, the taxonomies, metadata, the relevance and prominence of net measures, user-friendly terminologies, and a summary in the next steps. I can see these people joining in the lobby in the corner of my screen, but never mind. So the background and motivation. So the way in which we communicate macroeconomic statistics is really important. It has a significant impact on our users, their understanding, how and what they do and use the data, and the knock-on effects. And if we don't do that adequately, we can run the risk of unnecessary negative publicity, for example, in the media. The compilers ourselves are encouraged to better communicate with all users. When I mean all users, we're talking about expert users and non-expert users. You can have other categorizations of users, but the main theme here is to cover all users, whereby we provide information that ensures there's a degree of comparability, usefulness, quality, etc. So users find that helpful in the context of they understand what's the basis of the data they have and how can they use it. The UN, there's a generic statistical business process model which recognises the role and importance of dissemination and communication as part of the statistical value chain. Obviously, production, collection, compilation, etc. of statistics is very important, but also the dissemination and communication. And then we had some range of evidence that we gathered through a survey in the UK in February 2020 and August 2022. So at the beginning of COVID and in the middle of COVID, so as to speak. And it was clear that public perceptions about economic figures, economic measurement, economic terminology, etc., were not well understood, and the misperceptions were continuing. However, having said that, there was better understanding of items like inflation and interest rates because they actually affect us very directly. So if you have a loan for a mortgage from a bank, you're paying interest, and you know what that is, you know how that affects you monthly, etc. Likewise, if you have deposits in a financial institution, you know what interest you're getting in return. And then similarly, when you're buying goods or services in shops, the price of cars or the price of potatoes or the price of apples, you know what that means in terms of change over time. However, the language used was not always clear from the public's perspective. And then GDP and balance of payments, very high profile aggregates, etc., not very well understood. And on the labour side, some of the definitions were viewed as quite esoteric. What does idle mean, etc.? So we had a lot of feedback to encourage us to do something in this field. So if you think about our system in a way, there's a framework for improving the communication of economic statistics. That framework starts with a foundation of the infrastructure, classifications, sources, processes, etc., and both the economic side and the environmental side. Then we have a range of economic accounting standards where concepts, definitions, etc. are laid out. And now that will be supported with a common glossary of macroeconomic statistics, which I'll touch on a little later. Then in the communication task team, we had a focus on the alignment framework, taxonomy, and terminology and branding. And all three are quite key in this chapter. All of that then leads, if you think about going down the chain, to the publication and dissemination. And within that, we want to increase the profile of the net measures, not replacing the gross measures, but to complement them. In the near future, there will be, as the 2025 SNA and BPM7 are released, a compilers hub, which will have a lot of digitalized products, handbooks, manuals, etc. Lots of opportunity for information sharing on methods, what we do, what we don't do, articles, etc. And all of this obviously links our suppliers and producers with ourselves and ourselves with the users. Now, this is a new chapter to be included in the updated SNA and BPM. There's been a lot of collaboration with the SNA editorial teams and the BOP editorial teams, which has been excellent. There will be stuff that will be used in the SNA only chapter, but it will be consistent with the BPM, which may be a slightly more reduced version, but nonetheless, there will be consistency. This also highlights the importance and the role of dissemination and communication as a key component of the work that we do. And at the same time, it's going to provide some strategies to help producers of economic stats to communicate the statistics to the users. This also helps to improve the comparability of the statistical producers' communication to the outside world. Dissemination strategy and communication policy. The guidance to producers on production and dissemination of published data has differences. So production of the statistical publication is linked but separate from communication and dissemination. So on the production side, you want to make sure we have clear, understandable messages described in a way that non-technical, non-experts can understand, and at the same time with appropriate metadata methodology to support that. Some users will be interested in this information, some less so. But on the communication and dissemination side, obviously linked to policy, the transparency of the dissemination is important, and use of the different channels to give a much wider access to users. What we don't want is users to do a lot of work to get access to the data before they even start their analysis. Suppliers, as I've mentioned, is very important. So our communication with suppliers is of a different nature than the communication with our users. Now, as producers of statistics, we need to communicate effectively with our suppliers to get the data that we need on the basis that we need. We cannot ask the suppliers to provide data on a SNA or BPM basis. We ask the data as best they can provide, and then we convert that data to our needs. So it's important that the suppliers understand the language. Quite often it's going to be business accounting language for the suppliers, and then we need to ensure we link that to what we do in the SNA and the BPM. The definitions will change over time in line with their own company standards or business accounting standards, but we also need to adjust that to meet our relevant situations. So we need to keep up to date with how the suppliers are managing their accounts and ensuring that what they provide to us is fit for our requirements. Confidentiality is very important. Most statistical producers collect data from businesses and households, and often based on some legislation or law in place. These data cannot be disseminated, sold, or published in a way that identifies a single business or a single household. So we all have a range of appropriate data confidentiality processes, policies, techniques to anonymize the data, etc. And that should obviously be part of the process before publication of any data. But underneath that, we should also have an aim of, irrespective of our confidential data collection and respective of the policies, etc., as I've already mentioned, we should seek to maximize the dissemination of data as a public good for the wide range of users we have out there. But at the same time, like I stressed, the confidentiality is very important, so we don't want to breach that. But nonetheless, we want to maximize what we can provide to users. Now, moving on to the framework for alignment with the standards. A key feature of 2025 SNA and BPM7 is the ability to make comparisons across many countries. If the data is all on the same basis, it makes it much easier, not just for the comparisons, but also for users' use. The alignment framework touches on the producers to self-assess their macroeconomic statistics, and the users can assess whether countries are on the same basis and have implemented these standards consistently. In doing so, this allows the users to utilize the analysis on the basis that they are provided, but if they need to make any adjustments for some countries to get them onto the basis, on the same basis, they know and they have that information to do so. This is not meant to be a scoreboard. This is meant to help the users in particular, but at the same time, it does help suppliers. The results are readily available in an easily digestible format, and that's a key step that helps users. This framework is it got three key building blocks: concepts, methods, and classifications, and I'll touch on these. The screen might be freezing. It's not right. So an extract from the SNA alignment framework. If you notice, you've got categories: fully aligned, highly aligned, broadly aligned, as column headings from left to right to give an indication of, roughly speaking, where the situation sits. But going down the side, you've got the various aspects of units of the economy, including domestic territory, territorial enclaves, through to the production boundary and various characteristics like market output, non-market output, etc. So on market output, you could be fully aligned, but on non-market output, less so. But the users, if they know that information, that's very good for them. But also it's helpful for the producers to prioritize areas that they need to improve. Similarly, there'll be, I'm not quite sure what's happening on my screen. Similarly, there'll be an extract from the BPM use. If you notice, the same column headings, but actually as you go down the side, you've got residents of special purpose entities, international organizations, etc. So different categories will apply for the BPM, but the same underlying principles for SNA and BPM are being applied here. In terms of the guidance on releases, this is very important. You hear about a flash release, a first release, a final release, etc. Different countries use different terms, and obviously for users, it's not clear what is comparable with each other. So we've got quality, timeliness, frequency, and the reference period as categories to be used, and this is what we're encouraging producers to do, to utilize this in their titles. So is it a regular release? Is it after 60 days? Frequency is quarterly. Reference period in the release is the first quarter of 2021, and how far back has the revisions gone? If everyone could apply this sort of standard, then immediately the users understand what is country A's release compared to country B's release. This is not perfect, but this is a significant step in terms of improving comparability. Also, as revisions take place, this metadata dimension is very important. So are the revisions based on a change in methods, changes to source data, or coverage adjustments? But also, if there's no revisions to the actual data, but there's presentational changes to how the data is published and presented, that is also very important. So this is easing and the segue of revisions and the releases for publications to users and help their understanding as well as comparability. Now I'll move on to the net measure discussion. Here we obviously know there's a lot of interest in climate change, and there's a lot of changes coming through SEA and also the latest updates. So the focus on net measures, whether it's net national income or net domestic product or disposable activity, etc., the net series tend to be conceptually better than the gross series. But the publication of the net series and the focus on the net series is not to replace the gross series, but to complement them. Now, this also means the quality of our net measurement needs to improve. That's both consumption of fixed capital and, in the latest updates, the inclusion in the production boundary of the costs of depletion of natural resources. So we do need to have higher quality and reliable estimates, and there will be help and recommendations on the steps and the way forward. As I mentioned, we won't be using the term consumption of fixed capital. It will be depreciation, and the depletion of natural resources will be the two components from moving the gross estimate to the net estimate. And at the same time, we'll also want to provide more practical guidance on capital measurement to as wide a range of countries as possible. Now I'll move on to the use of easier to understand terminology. One of our issues that we got back from our surveys was people didn't necessarily understand some of the national accounting and the balance of payments terminology. So in these two updates of SNA and BPM, there's been a lot more work done on harmonising the definitions across the standards, and this is focused more so for producers. Then we've produced a single harmonised common glossary of macroeconomic statistics covering the economic accounting statistical standards. Now, this is very important. It's given another layer to ensure harmonisation across the standards. A glossary may sound a little boring, but actually it's very important to get correct. And it's the first time a glossary exists for some of the standards, as well as it's a common definition across the piece for each term. So the user-friendly terms I've touched on, and I'll come on to in a moment or two. Looking at the glossary itself, as I mentioned, is a significant effort, and it will provide users as well as us a clear and consistent understanding of key economic terms and definitions. This will be published as a separate electronic publication. It's also been generated through a big exercise through the communication task team, all the way through to the SNA and BPM editorial teams. A lot of people have been involved, a lot of work's been covered. To give you an indication, we started with around about 1,240 terms. We've ended up with about 825 terms. This may change by the time the SNA and BPM work is finished, but each of those terms have now got an agreed definition. We've also had inputs from 8 statistical standards, so the SNA, BPM, and those others listed there, the European System of Accounts, the Government Finance Statistics, etc. So we're harmonising, and we've made the definitions consistent across these standards for these 825 terms. So examples of easier to understand terminologies, I'm not going to go through all of these, but for example, compensation of employees, it would be remuneration of employees. Consumption of fixed capital, people don't understand that, but they do understand depreciation. And here I want to make a note. These are changes in the terms, but not necessarily changes in the definitions we apply precisely within national accounts and balance of payments. So, for example, company accounts depreciation is on a different basis. But if you say to the public out there depreciation on their fridge, their car, their house, they understand that. If you say consumption of fixed capital, they don't understand that. However, if you say depreciation, they don't necessarily know whether you're applying historical cost or a current replacement cost. That's one step too far from many of their users out there. But understanding depreciation gets them in the right ballpark. The term net has been sort of very loosely used in the past. The net errors and omissions, that's going to become statistical discrepancy, so that's across all the standards. But when you talk about net fees, what do we say? It's fees less service charges. Sometimes people, when they see the term net, it could be net in terms of acquisitions less disposals, or net in terms of gross and net tax, etc. The net term should be used, as I've mentioned, in terms of the gross to net picture, and then also in the financial accounts on the liabilities and assets side, depending on acquisitions, less disposals, and showing things net. Otherwise, it shouldn't be used anywhere, and the encouragement is to use the net references in full. So, for example, net social contributions is social contributions less service charges. Now, social contributions less service charges may not be precisely the definition we use, but is a better understandable term and avoids the use of net. So obviously there's a few more there for your digestion. The chapter will have this in detail, and also the presentation will be put onto the website after these sessions. And then finally, to summarize on the 2025 SNA and BPM 7, there's a lot of significant developments in this area on communication and dissemination. So this new chapter is new to both updates and is dedicated in this area. It's involvement from both the boards. It's a joint chapter, as mentioned. It reflects the outcomes of a lot of other work. The communication task teams work in terms of different guidance notes, which all went for global consultation, as well as feedback from AEG and BOPCOM, as well as other meetings that have taken place led by the OECD, the UNECE, etc. I've said this chapter will undergo global consultation. That came to an end last week. So obviously we're now in the process of taking on the feedback from the global consultation to move towards finalising the chapter. I've touched on the common glossary, which is predominantly focused on the SNA and BPM, but also have had key inputs from 6 other statistical standards. The branding, which has gone through a couple of iterations and then changed post the global consultation, we will be using macroeconomic statistical standards, or MSS, not MESS, in case somebody thinks of that idea. But this will help to bring the other standards as they get updated under the same umbrella and develop a branding for statistical standards. I've mentioned the development of a compilers hub, which will bring together both producers and users and have a lot of information sharing, because there is only one SNA and one BPM, but there are many countries of the world developing accounts following those guidelines. So instead of reinventing many wheels, we should be sharing that information to make life easier for everybody. And then finally, the digitalized versions of the new updates, but also the digitization of the past and existing standards is very important to have that available in electronic form. On that note, I'll come to an end, and I'll thank you very much for your attention. I'll stop sharing and I'll pass back to Alec, or even Rita on the screen. I think it's Alec, I think.
Thank you.
Any questions are welcomed.
Any questions or any comments on the thematic session on communicating and disseminating economic statistics, or some of the issues that the other colleagues have raised throughout the discussion? It's open to the floor, so you can simply raise your hand or just put it in the chat. There is a question on where can we get the glossary document. A question from Akila. There's a question of where is the glossary document? I guess referring to Sanjeev's
right.
last slide or thereabouts.
Yeah, so the glossary document will be put online when we've finished, but obviously there's been a version that we'll be sending out. I think we have sent out for consultation. So it's nearly complete. Obviously, we will take on some changes and comments, but it's also helping inform the chapter drafts as we go along. But I will double check what's the latest version of the glossary that's available and come back to you, Alec.
Okay. Any other questions or comments from the audience? There is, oh, okay, that was just a thank you. It was something in characters I couldn't recognize, but thank you.
Alec, can I just add one other point?
Yes, please go ahead.
Obviously, the glossary, for example, and like the SNA and BPM is done in English, it will be translated into, I think, the 6 official languages as well, just for information to the audience. Thanks.
Thank you very much. I do not see any other. Yeah, I see a question from the Central Bank of Pakistan.
Yeah,
Maybe
I've got it. So I would say there's 2 steps to the answer to that question, just in case people haven't seen it, is will we need to prepare country-specific glossary documents for our national data summary page? This is from the State Bank of Pakistan. I think in the first instance, the glossary should be universal across SNA and BPM and the other 6 standards. So therefore, that's your starting point. And I would say probably 90, let's say 7.5%, that is a number I've made up, i.e. it's meant to be very high, very close to 100, will serve every country's purpose. But the reason why I don't say 100%, there will be 2 aspects. One, when you translate the glossary, you may need to change some words to retain the original meaning. Therefore, that's one rationale. And the other rationale is there may well be specific country circumstances that don't quite fit into the term that you might want to amend so it does also more fully represent the country situation. So otherwise, my summary is the glossary will meet most needs. There's a translation aspect and then there's a specific country aspect, but they will not be significant, I would hope. Thanks.
Thank you very much. There is another question there from Vandano. It's on consumption of fixed capital and depreciation, depletion.
I'm not quite sure what clarification is being sought, but very briefly, if you break down what's happened is from the gross measure to a net measure, we've always had what we called consumption of fixed capital, or in the previous standards, it was capital consumption. But we know what that is obviously covering the fixed assets. So we're changing the term to depreciation to help users understand, and producers will still know it's depreciation. But we know what we use in national accounts versus business accounts, the difference between current replacement cost and historical replacement cost. We know what we need to do for national accounts and balance payments. The second aspect, in a way, is the change to the SNA and BPM, whereby we are recording the costs of depletion of natural resources into the production boundary. So this now becomes a second item to move from gross to net. So when we move from gross to net, we allow for depreciation and we allow for depletion. Now, hopefully that provides a clarification being sought. If there's something else being sought, then please let me know. Thanks. Back to you, Alec.
Thank you for that clarification. I think I'm sure it addresses the concern raised by Vande. Any other questions or specific comments? Okay, so if there are no any other comments, or if you have any other issues, the webinar will continue tomorrow. And lastly, but not least, I would like to thank all our presenters, Carlos, Marja, Jennifer, and Patrick, and Sanjeev, for really putting up a good show. And I know the times have not been very fair to you, but you've really put up a good show and stayed late, or maybe not slept well enough. But so thank you so much for joining us and sharing the updates of the current work going on the 2 manuals. And we will continue tomorrow. And I just want to make just a few announcements about tomorrow. Tomorrow we are going to run parallel sessions. So there'll be a session dedicated to the SNA. So for the SNA session, please join using the link you've done today. And for the BPM session, there is a different link which has been posted in the chat, and it is also available on the event website, and which can also be posted here. So let us reconvene tomorrow at the same time, and we will start, the sessions will be running parallel. So BOP compilers, you just take note of which session applies to the BPM work, or updates rather, and as well as for the national accounts team also join the relevant session. We put in the event website, so the links are always there in case you just miss it. So thank you so much. And last but not least, I'd like to thank everybody. We've had really, I think at the peak, we had about 155 people joining. So that's quite commendable given the time differences, even within across Asia. And we look forward to having all of you tomorrow. So thank you so much for today, and we look forward to see you again. Have a good day.
Thank you, Alec.
Thank you.
Thank you. See you tomorrow.
Bye.